Oh, there we are. We're alive. Okay, super. Good afternoon. Welcome to the Business Broadcast. I'm Nikki Larkin from Growth Accountants and Succession Planning. And today I'm delighted to be joined by Mark Dolby. Hi, Mark.
Hi, Nikki. How you doing?
So, Mark is a pensions expert. Well, actually, he's an IFA, so he's actually expert in lots of different areas. But today we're really focusing on pensions. He's from Beaufort Financial. So we thought it was a really good idea. As all you business owners out there, you're always so busy building up your business. Often you're forgetting about what are you going to actually do and how you can survive financially when you retire. And there's lots of good tax incentives and things by making sure that you do things properly, which is why we've got an expert here today. So just also a little bit of housekeeping. If you're watching live, we really do welcome questions. No questions too silly. Please do ask them as we go along. Don't worry, Mark can take it. I'm sure he can do any tricky question. And if it worst case, we'll come back to you. If you're watching on capture, please do DM us, and we'd love to hear from you. So, Mark, where do we start? So, for a business owner, as we know, they're so busy in the day-to-day of their work, they're not really looking at what's going on. So where would you, if you were meeting a business owner for the first time and they just suddenly woke up and thought, oh, I do need to do something about the pension, where do you start with them?
Yeah, great question. Thanks, Nikki. Yeah, so in reality, quite a lot of the clients we deal with, I suppose our mainstay is business owners from that perspective, people who are time poor, exactly as you mentioned, who have never really, I suppose, had the time to take a step back and build a plan. So the starting point would really be, I guess, having an understanding of what your objectives are in the short and the longer term. And then together we can sit down with them and try and work out, is it achievable doing what they want to do? And are their objectives achievable, I suppose, is the main thing. So if you take kind of product off the table to start with, whether it's a pension or whatever else, an ISA, it's more understanding, what is that business owner trying to achieve? As business owners ourselves, I completely agree with what you're saying. You're trying to run a business, look after staff, make sure that everyone gets paid on a monthly basis, and often don't focus on your own, I suppose, your own situation from that perspective. So the first things first is trying to understand where you are and where you're trying to get to, I suppose, is the starting point.
And do many people have a clear idea on their expectations of what they want to have? Because I often talk about that when I'm saying to people about how they want to grow their company and what money they want to be able to get out of the company when they sell it. So if they don't have a clue, is there any, what's your normal guidance to be able to help them to ascertain what they need?
No, completely. And again, that's exactly right. I think a lot of people, again, in our industry, a lot of the clients we see aren't really aware of what they have, whether they be business owners or not. I've got these 4 pensions that I paid into years ago. I've got this ISA, whatever it is. They don't really understand the value of it and what it means for them in the long term. So, retirement is about, I suppose, getting your ducks in a row, working out, most importantly, what you want to spend. I think that's the thing that kind of gets missed a lot. There can be, I suppose, 2 extremes of retirement. Can be one, turn the gas off and kind of hunker down and, survive on the state pension to a certain degree, which for some people is sufficient. Not for me personally. And then moving forward, there's someone, absolutely right. And then there's other people who their sole focus on, for example, is paying the mortgage off at all costs, and they're prepared to wait until retirement to start enjoying it.
Well, I suppose that works for some people who are intending to downsize from their property.
Yes, yeah.
That's the thing, isn't it? Because there's a lot of things when you're planning with people, you're not just talking about the pension, you're talking about the whole lot. So it's everything getting in the mix. It's like if they're going to sell their business, what they could get for that. It's if they're going to downsize or
exactly that.
Move or whatever they're going to do.
Yeah, and that's really important. Again, was kind of an obvious point, I'd suggest, but for people on the call. But I think it's having the right people around you. we absolutely work alongside people such as yourself, who are experts in your field, obviously the legal side as well. You want to make sure that you have a team preside, and banks to a certain degree, I guess, on that basis, do you have the right people who can help you get to where you need to get to? And most importantly, you're on the same team, not taking points off each other, showing how clever they are, because the client doesn't actually get to, the result they're trying to achieve, really. So yeah, you need to take everything in the mix. Do you have children? Do you want to put them through university? Are there weddings to plan for in the future? What happens if grandchildren come along? Do you want to look after those and make gifts and so on? There's so many things we can add in, and the discussion really would work on, well, here's my understanding of where you are today. In order for us to do what you're trying to do, whether it's retire at a certain age or sell a business, as you mentioned earlier, Nikki, we don't value businesses, but we can tell someone how much they have to sell the business for to be able to retire, for example. That would kind of come in the mix as well. And it's not relying on one single area to cover your plans for the future, because with the last 3 years we've been through, there's been a fair bit has happened. Let's put it that way, which potentially could have an impact on that plan if you just backed one horse to a certain degree.
Absolutely. And before we got sort of go through the next section, we did touch on something pre-call about now the young ones out there that are listening won't sort of remember this, but we will know lots of people that we know that are running businesses that either them or their parents did get really scarred by some pension funds disappearing and things, and people's pension pots disappearing overnight.
Yeah,
I'm trying to think how long ago. That's probably about 20 odd years ago now, isn't
at
it?
least, yeah. It was the match was prior to that, actually. Yeah, but you're right. Yeah.
Yeah. So, but just so reassure us about that. The reasons why that sort of thing's less likely to happen now, and
Yeah, absolutely.
why should, because I have so many people just go, oh no, I'm just going to buy a load of residential properties and rent them.
Completely understand. I mean, legislation changed dramatically on the back of Mr. Maxwell sort of disappearing off his boat when he did all those years ago. And really the issue there was that companies had access to pension funds and were able to access individuals, company pension funds. And therefore, as you mentioned, a lot of that money disappeared. Legislation was changed on the back of that. And actually, pensions are ring fenced now from companies to dip into. They have to declare them on their balance sheet in reality, which is why you see these sort of larger firms are in deficit sometimes, which has a sort of detrimental effect on their profits, deemed to be anyway.
Yeah. They have to, that ones that, most SMEs outsource it, and they use the auto enrolments, they use Scottish Widows, Aviva, etc. or Nest. But there are a few that might still have their own pension fund, but those have to be audited. There's really clear guidance.
Completely agree.
It's much harder. I mean, because I know that we audit some pension funds, and
yeah. No, you're completely right. I mean, things have moved on to the other end of the scale. In reality, it's your own individual monies. It's ring fenced. In essence, it's held in a trust for you as an individual, whether it's a master trust, the companies you mentioned, or an individual trust arrangement like a self-invested pension. So you're completely right. So in terms of the money disappearing, even with the last 3 years and the COVID situation, and last year in particular with Liz Truss, 3 prime ministers, and the war in Ukraine, the markets were definitely volatile and probably will be for the foreseeable future. But people didn't lose all their money. There were probably a 20-30% sort of variation, but that isn't it's not great.
Long term with that, don't you?
Absolutely.
That's a fluctuation. It's not great for people that are about to mature their pension or whatever, but
no.
Hopefully the people we're generally talking to here are people that still might have 10-15 years before.
Yeah. And the most important thing, I guess, similar to what you guys do as well, I guess, it's the annual review or the regular check-ins, because you're right. If you build a plan today and to retire in 10 years, for example, and don't sort of review it along the way, life changes and things change, circumstances changes, and you just need to make sure you're still on track by those regular kind of touch points, really, from that basis.
Yeah, I mean, every time when we have our, or we have lots of different reviews, but at least one of the reviews during the year with like the limited companies, we're always have you maximised your pension pot?
Absolutely.
It's a good reduction as an employer contribution, it's a good reduction for your corporation tax. So it's you know, some really good tax savings to do it. And like I always say as well, if you're, you know, you're getting just from the corporation tax, what you're going to be getting 25% now. So if you put, say, let's use easy numbers, put 100 grand in, you've saved 25 grand on your personal, on your corporation tax. So even if it went down 20%, it still quids in.
Yeah, you're completely right. And this, as a company director, the one thing you do miss out is on the things that an employee would get. So as you know, if we go to work an employee, we get the pension you mentioned, the auto enrollment, you get death in service, you get other bits and bobs on private medical and so on along the way. Really, as a director, you don't, or a company owner, you don't have that sort of I suppose those benefits, do you really? So it's down to you to look after yourself to a degree.
Unless you work for Orange Accountants or Succession Planning,
which is very good.
Sure everybody has everything.
Well, that's very good. So that's, I think that's the thing again that business owners maybe aren't good at, providing for themselves, because the idea is to keep providing for everyone else and make sure that's covered first, and the business is still growing. So you do need to exactly have conversations like you just mentioned to make sure, have you used your allowances? Are you taking money from the business in the most efficient manner, really? Yeah.
So you've met this guy or lady, and they they're in a bit of a pickle. They've not really done it, but they've done anything significant. But they've now gotten a bit of an idea of where they want to aim towards. Yes. So what are the quickest things to help them get to that goal? What do you do with them?
Fine. So I think the first thing is to start early, plan early, do something rather than do nothing at all. It's often a conversation, well, I'll do that in 2 years' time. One thing, just touching on pensions abroad, just roughly speaking here, is the fact that you can use unused allowances for pensions in use of previous years, even if you just had a pension with £1 in it. That kind of helps us with a sort of clock ticking on that basis. So to do something allows us to use contributions that you possibly wouldn't have used before. So you've got this year and 3 years prior to that, which can be in excess of, can be £160,000, which is a significant number. So if you've left it late, there is the opportunity to catch up. However, the earlier you start, the more things start to accumulate, and the bigger the pot is likely to be in the longer term. So it's doing something.
Yesterday, I was talking about a chap who, luckily, he's really done brilliantly at growing his business. He's got £1 million profit this year. Yeah. So this is perfect time. He's going to put in his whole 160 and maximize it. So those thresholds, have they not changed going forward? Are they not going up?
Exactly right. Good point. Well made. So that was a big change in the budget, which I'm not sure everyone saw coming, and I'm not sure how well received it was, but it was good news. So so you're right. So now, in terms of how much can be made a contribution on an annual basis, it's up to £60,000 per year rather than 40,000, exactly as you say. And there's also no lifetime allowance sort of limit before.
Excellent news.
It is good news. There's sort of small print underneath that in terms of how much tax-free cash you can take from it, but on a separate basis, you can have what you want in your pension. Really importantly, that's outside of your estate from an inheritance tax perspective as well, which people sometimes kind of aren't aware of. So it's a very beneficial way of, I guess, passing on money to your family if and when you're no longer around in a really tax efficient manner. So out of the business into your pension very tax efficiently, as you mentioned earlier on, in a corporation tax saving, no benefit in kind or tax to you as an individual, goes into the pension fund, grows tax free, which is no capital gains to worry about or income tax on that. And then really it can be passed on to your family in the future as and when funds are left behind. I guess we should say based on current legislation, because pensions change regularly and governments change as well. But as we stand, that's the current situation.
And that's why you need regular reviews on these things as well, because things do change. Absolutely. So what you might have been advised 10 years ago when you were, you did a load of planning could be all completely different by now.
You're right. And I think a lot of clients we do new clients come on board are because their advisor hasn't been in touch and hasn't had the regular reviews, and I think that's where people sort of lose interest sometimes. I got a statement from Scottish Widows, as you mentioned, it's down 30%, like I just talked about. Oh, well, we'll just put that under the stairs and we'll forget about that and deal with that later. I'm not saying you can rectify that 30%, but you should be aware of the impact it has on you. Because those things hurt less if you're aware of the impact on you if you have a long-term plan. Whereas if you're looking at it every day, that could be an issue.
yeah, you shouldn't get obsessed and look at it every day, not unless you're really about on the point of buying your annuity or cashing it in or whatever.
Exactly.
But but have a good proper annual review with someone like yourself. Absolutely. So a good question coming from Chris.
Okay.
So Chris, so Mark, do many company owners rely on the sale of a business to fund their pension? Ooh.
Great question, Mr. Pownall. Yes, absolutely. I mean, that's often the thing you hear the most, isn't it? My business is my pension. The issue we have with that, as again I keep talking about, is does your business look the same as it did 3 years ago? In terms of the conversations we were having, Nikki, have your costs increased in terms of what's happening with the cost of living crisis? So yes, you can. And again, with the plan that we build, we would show you if there's a potential lump sum required to make your retirement what you want it to be, what you would need to sell it for. Again, really important. We don't value businesses, but we can give you that guidance. Again, working with people like yourself, Nikki. So we can show you that. But I think that's all your eggs in one basket.
Precisely that. Because obviously, from the succession planning perspective, we would hope, you'll have a great amount of money and be able to fund a wonderful life going forward. But things happen. We had a great sale lined up at the beginning of this year that would have netted the client, millions and millions, not have to work another day in life. Fantastic. But the potential buyer saw how much the energy bill was then going to be for going forward, and it just killed the margin in the deal. And so it killed the deal. So you've got to be, me personally, yes, I'm building up both my businesses. Sure. And hopefully I'll get something from them. I've got a lovely property, which I'm building up equity, but I'm also building up my pension. And one day I might, do rental properties and stuff as well, and a whole big mix of things.
Yeah, and that's the ideal, Nikki. What you're talking about is exactly right. Spreading your risk, which is really what you do on investments as well, isn't it? You spread your risk across a number of areas. So I guess, what is it? You buy umbrellas and you buy ice creams. If it's raining, you make it. If it's hot, you eat your ice cream. So that's a good question.
Even though it does usually mean I'm usually cash poor, asset rich, cash poor, which never mind. Yeah. But hopefully I'll be both rich soon. We got some other. We haven't finished. We haven't even touched on everything yet, but we've already got more questions coming in. So I hope if you don't mind, Mark, I think what we'll do is we'll do the questions. We'll go through your final tips and things. But I think we're probably going to need another session because there's just so much to go through. So Susan Marie's asking, do you work with some traders, freelancers who might not be planning to have a business to sell in the future, but just need some guidance?
Absolutely right. Exactly right. And I think this is the way our industry's changed. Well, I don't think our industry has changed quite significantly on this basis. So if you go back, let's say 20 years, everyone was paid on a commission basis. So there really was, without being unkind to anyone, a product had to be sold in order for the advisor to be paid. That's just the way the world was. Nowadays, it's very much advice driven, and we would just charge a flat fee to sit down with individuals, whether they're self-employed or limited company or, just on an employed basis, really, and look at their situation for them. Absolutely right. There doesn't have to be any product at the end of that. It just gives some guidance in, okay, this is my understanding of where you are. Does that fit with you? Have you thought about doing this instead? Or everything looks great, which is a nice scenario. And you know what? Quite a lot of clients are surprised how much they have when they do sit down. That's another thing to bear in mind as well. Actually, I think most people seem to spend in retirement about £2,500 a month when the mortgage is gone. Round numbers here. Maybe some holidays on top of that. You'd hope so. Not me, Nikki. I'm agreeing with you, but that's the broad number. Maybe the more.
No. I'm just thinking. That is the thing. Mortgage is my main expense. Mortgage and stuff for schooling. Those are the two. So once I've got no mortgage, once I haven't got tuition fees, that's my cash flow is completely different.
So right. They make a big impact, don't they, on those? So all of a sudden, if we can plan for that, if you think about as well, things like state pensions, which I know are kind of poo-poo to a certain degree, but a couple.
I wonder if I'll ever have one. I mean, that's a good valid question. I do seriously. I don't plan about that because I'm 48.
Never.
And so quite honestly, so I think I'm not going to qualify for it until 67 or 68.
That's right.
But honestly, the way they keep increasing it, I'm actually planning that I probably won't. I just assume I won't get one. So if I do, it's a bonus.
And I think that's, I mean, it's a good way of looking at it. But, you know, if you're approaching retirement now, we can factor that into the plan. I think you will still get a state pension. It'll just be at what age, as you mentioned earlier on. And the people who are getting a state pension now with the recent rises are almost earning sometimes up to £12,000 a year, which again, don't rely on it. But if you imagine at 67, a couple bringing in £10,000-12,000 a year each, all of a sudden, you know, that's £20,000 a year of your expenditure covered, which is a nice place to start. So really what you're trying to do then is add on top of that, isn't it? With your rental properties, with your pension, with your ISAs, with your savings, you know, those sorts of things as well. But absolutely, the answer is yes to the question. We do absolutely.
So another question. So say, I mean, I do have a variety of different pensions, probably not as much as I want in them as yet, but, you know, I do have quite a few because I've worked at various different places.
Sure.
But say I'm starting from scratch, say that I didn't have anything and I'm 48, say that I'm intending to work for another 20 years, say. So say, I mean, you're saying 2.5 a month now, but let's be more realistic. By the time you've got inflation and everything, another 10 years, say that I needed to have 50 grand a year and I've got 20 years to get my pension pot so that I could have a 50 grand a year income from my pension pot. You know, is that unrealistic? What sort of crazy, is there any easy metrics to work out of how much I need to put in for the next 20 years?
I mean, on that basis, really, we're trying to get very simple numbers. We're trying to get to £1 million, aren't we? Very round numbers on that basis, because we need.
You're saying I'm only going to live 20 years after that.
Well, we want some growth. We want some growth on it. We want some growth on it, which hopefully it just won't sit in the bank. So that would be a case of where you invest the money. So really, what you're trying to do is when the pension fund is starting to be taken, you're trying to replenish what you're taking in terms of the investment return. That's really what's trying to happen. So, you know, very round numbers. But I think it's really important, Nikki. Again, you know, you see these adverts about, you know, you need 500,000, you need 1 million. That's quite a generic statement, you know, because you know, me and you would have different expenditures, you know, different lives. That's the way it is, isn't it? And everyone's the same. So I think it's best to focus on the individual. But yeah, in that example, around about £1 million. So we need to start making some contributions.
So you need to be putting in almost your maximum amount each year. So you got up to 60. So as long as your business is doing well, you know, actually that's not unreasonable. You know, next 20 years putting 60k in a year and not having to worry about this getting over the ceiling either.
Absolutely right.
Yeah,
and again, you know, that works completely. That works. And again, it's, you know, do something rather than nothing. So if you just set something up, if you can't afford the full 60 this year, you do have the ability to go back, as I mentioned earlier on. If you don't do anything, then we've lost another year's worth of contributions we could have used. So, you know, do even £100 is better than nothing on that example.
Yeah, absolutely. So I'm really they've got so many questions going. I'm sorry if I miss any, but I've had one in from Mr. Elks, who previously has apologized for not making it today, but he's got some fun things that he's doing today. So
more fun than pensions. I'm disappointed.
More than pensions.
Can't believe it.
So I gave him a free pass for today. But he'll be back with me next week. Is there time for an overview of the different types of pensions, SAS, SIP, pension, personal, the pros and cons? Well,
we can give it a go.
Do that in like 3-4 minutes.
We can give it a go, yes. So a personal pension, if I go to the sort of the more traditional pension, it's a pot of money. You invest in a certain way, and at some point in the future, you can access that from 55. 25% of it is tax-free cash that you can access, and the remainder you buy an income with, and you're taxed as income on that basis. That's really how that works. No really more bells and whistles than that. You can have 10 funds to choose from. You can have 1,000 funds to choose from. And that's obviously discussion with your advisor. A self-invested pension, I guess, is another wrapper on top of that. And what it allows you to do is to choose your own investments to a certain degree. So that could be individual shares, as an example. And also probably the biggest one is commercial property, which again, I know we touched on earlier, Nikki, with regards to you could hold a commercial property that your business is based at. and pays a rent to within your pension fund. So a SIP in particular has been a thing that's been more and more prevalent for business owners, again, who have their own premises.
Because we were talking about that, because that originally had been my plan. I'd gone from working from home to then having a serviced office to then having a lease, and the intention wasn't to buy a commercial property, but because of the hybrid market, we were actually going back to serviced offices. But if you are having, if you think you're going to have 10, 15, 20 years of rent in a commercial property, why not buy one if that is thing that that could work for you?
And if it's your own business and you've got that element of control, you can't control the rent, but whether your business can maintain it. Absolutely right. That's really important. So you can't manipulate things here, but that would take that away. In essence, the money goes into your pension fund on that way. Also, that commercial property is ring fenced from sort of creditors and so on as well, which is another thing just to bear in mind.
Interesting. Okay.
It's a bit more expensive. A SIP probably can cost you, roughly speaking, between £500 and £1,000 a year additional that you don't pay for a personal pension. Very round numbers. There's different SIP providers out there, but really you're giving yourself, I suppose, more bells and whistles.
Yeah.
A SAS is then the next one, in addition to that, really the next level, which more people can be a part of, and the ability to loan back money to the business is what a SAS will provide you with, in addition to commercial property, individual shares, and so on as well. So it's probably a broader discussion. They were certainly, again, prevalent when business owners had the ability to take money back if times were hard. There's, in essence, a loan back to the business, and then that gets paid back to the pension fund.
But you have got to be very careful on how you do that to make sure it's done legally.
Absolutely right. And these guys, so the SAS and the SIP would have professional trustees who would make sure that you're doing exactly what you should be doing and won't let you do anything you shouldn't. That's really important. Obviously, working alongside an advisor. So yeah, it depends on, if someone's starting out, it's unlikely they'd need a SAS, if I'm being honest. In terms of the first pension, you'd probably accumulate funds into a personal pension, let them accumulate, and then possibly look at a SIP or a SAS as and when you were thinking about having additional things, really, like I said, commercial property in particular.
Yeah. Right, I've got one more quick. I hope that was helpful, Nigel. And I've got a couple more questions. I've got one that I'm just going to ask, which a lot of business owners ask. For a business owner, should they be taking it and putting it in as a personal contribution or as an employer contribution?
So I would definitely talk to a good accountant. Nikki would be the first thing. That's a good answer. It depends on probably from a limited company perspective, company would make sense first because of the stuff you've talked about, corporation tax savings and so on. You're not having to draw the money to put it back into the pension to get the tax relief on it. You kind of get it at source. So you'd suggest probably it's the limited company would be an employer contribution.
Yeah, at the moment we generally, because of the 25%, we generally just no brainer at the moment to say. There's some instances where it doesn't quite work, but the general thing is that. Right, let's try see if we can do 1 or 2 word answers to this. Okay. I think this should hopefully be a one word answer. Can you help pull pensions together? I've got several, Susan says.
Absolutely right. And, consolidation is great from reducing paperwork, but you don't necessarily have to consolidate, but we'll definitely look at the pensions. Absolutely. That's what we do.
Yeah. And Catherine says, is a basic one you can suggest just to stick something in? So I suppose it's like, I haven't done anything yet.
Yeah. I mean, yes.
The starter one.
So yeah, that's a great question. You would probably go to one of the larger providers, someone like, as an example, someone like Royal London, Scottish Widows, the company you mentioned. You want to keep your costs to a minimum to start something up. So you're trying to find a contract that's inexpensive. I could certainly give you a guide in terms of where to put the funds, of course.
Perfect. Right. And just to finish is a comment. Catherine says, I think we need a few more of these, Nikki. Huge topic. So fingers crossed, Catherine, Mark will come back. So hopefully we've not scared him off today.
Not at all.
Super. So Mark, how can people get hold of you? Because obviously it's a huge area. Obviously everyone can see how approachable you are and great to ask these sort of questions. So what's the best way to get hold of you?
So yeah, so Mark.Dolby at beaufortfinancial.co.uk is my email. Alternatively, you find me on LinkedIn, quite active on that, like yourself, Nikki. So you should certainly better find me doing that. And
You'll find Mark in some shorts on LinkedIn normally.
don't put them off. Don't put them off. And our website as well, beaufortfinancial.co.uk. By almost, they can find me and the team on there as well. But yeah, I'd love to help if I can, of course.
Well, I say that because Mark's team do a huge amount of charity fundraising. So they do lots of different cycling or running events and different things. So that's what I say about the shots. Okay, so thank you so much, Mark. I hope you do come back soon. Thank you, everybody. It's looking like a very sunny weekend. I know that a lot of people are running the Green Park 10K this weekend. So good luck to that. Don't forget your sunscreen and lots of water. One of our clients organises that, so we're a big advocate of that one. And have a lovely weekend. Cheerio.
Thank you, everyone.